Yesterday, the Bureau of Economic Analysis released Q2 revised GDP data. The numbers look good, but when you dig deeper, there's more to share. So, the top headline number is that the annualized growth rate of Q2 was 3.3%, which is higher than 3% expectations that the market had. So, this is a strong number by all means and indicates the economy is growing. Let's dig a little deeper, and we've done that for you. Here are some things that I want you all to consider. First, the good news. The good news is real disposable income jumped by 5.3%, and that tells us that the consumers are living a good life. And as I said, growth expectations is higher than expected. Let's talk about the bad news. Investment slump. Gross private domestic investment fell by 11%. And that was mainly due to a drop in residential investment by 43%, and then a decline in equipment investment by 20%. Also, we saw a weakening of the service industry. Consumer spending on services, which is a major driver of the economy, plunged 13.8%. And then we expected this government pullback. Federal non-defense spending declined by 12.5%. Here's the in between. If you look at the numbers, it looks like net exports have increased by 5%, which helped our GDP growth rate. But it's led by a collapse in imports, a decline of 29.8% in imports from Q1 to Q2. Exports also declined by 1.3%, but the overall measure indicates that there's an increase of 5% in net exports. So the punchline here is trade is becoming a less important part of our economy, and that is going to have some long-term implications. So why does this matter? For households, you need to know that real disposable income has increased. You have some breathing room, and 70% of the economy is really driven by the consumer. So we need this. Businesses, they've really pulled back, and we're seeing it in the labor market a little bit, but investments and spending on businesses has decreased. And then investors, the GDP beat looks less durable once trade effects are stripped out. So what does this mean for business and stock market, and the future of our economy is really unknown and something that we need to look into in the future reports. So that's our summary of this latest release from the Bureau of Economic Analysis.